Greetings, everyone. I am going to go through some homework problems from chapter 1. So I just want to make sure, yes, you should be able to see my screen. And I am going to go in here and work on some homework problems. So we're going through some Cengage problems. And what we're going to do is some of these problems are algorithmic and some of them are going to be basic or custom for everyone. This particular problem, problem 1-2, basically gives us some information here. Irvin owns and operates a travel agency. The assets and liabilities of the preferred travel agency on December 31st, 2025, and its revenue and expenses for the year are shown here. And then it tells us what the capital account was, and during the year, additional investments that were put in and withdrawals. The first step in all the financial statements will always be to create an income statement. So we know an income statement are revenues minus expenses. So when I look here, I know we're going to show fees earned of $1,075,000 are the revenues. We know accounts payable is a liability that goes on the balance sheet. Accounts receivable is an asset, balance sheet. Cash an asset, balance sheet. Irvin, this is going to be on the statement of owner's equity. Land is an asset, balance sheet. And then supplies is an asset. And all of these, apart from supplies, are expenses. Expenses are included in the income or in the income statement. And the income statement is made up of revenues minus expenses. So the first thing we're going to do is an income statement. So as you see here, I'm just going to expand it. Well, I'm going to try to expand this income statement. And we will start with revenues. And the revenues are fees earned of $1,075,000. I think I'm going to put fees earned since that's what they called it. 1,075,000. 1,075,000. Then we will have a list of expenses. I think they want income statement for the period ending or for the year ending. Let's see what they want. For the year ending. Well, let's see what the income statement. Be sure to complete the statement heading. Refer to the list of accounts, labels, and amounts, descriptions for the exact wording of the answer choices for text entries. Enter the amounts as positive numbers unless the amount is a calculation that results in a negative number. Expenses should be positive. Colons will fill in where needed. So an income statement, I need to figure out what they want right here because let's see, here it tells us. Here are all of the different accounts that we will use. And here we will show December 31st for the year ended December 31st, 2025. So let me go put this in. That's what they want. So we'll have fees earned, then we'll have expenses, and then we will put the expenses in the same order that we see here. So I'm going to start with miscellaneous expenses, rent expense, supplies expense, utilities expense, and wages expense. The miscellaneous is 22,500. This will be a miscellaneous expense. Why is it coming up red? I just want to see what I'm doing wrong. I'm just going to cut, copy, and paste this. Okay, 22,500. The next one will be rent expense of 170,000. The next will be supplies expense of 16,000. Then we'll have utilities expense of 51,500. Then we'll have wages expense of 615,000. We will then have total expense, but I'm just going to make sure I have my figures right. Um, Total expenses here. And we're going to total this. So here I've got 500. That's, oh, it's going to go over here. Um, Actually, I should pull up an Excel sheet. Let me see. Just going to pull up an Excel sheet so I can oh my goodness gracious. There, sorry about that. I'm going to take the 22.5, the 170. So I'm going to take 22,500, 170,000, 16,000, 51.5, 615,000. And this should be 875,000. And then I should be able to put in net income. So the 1,075,000 from 875,000, 1,075,000. So I'm going to do the 1 million minus the 875 should give me a $200,000 net income. Okay, we can check our work. And basically, you can see all of the check marks show all is well here. Okay, we have to do this before we can do the statement of owner's equity because we need this net income figure in order to do the statement of owner's equity. So now we will go to the statement of owner's equity because we'll need to input that. Now, again, refer to the accounts in order to do the appropriate statement of owner's equity. Again, we can go to our labels and we can show how we start and how we end. For the label, I believe we're going to show for the year ended December 31st. Let's just make sure that we put that in. Now we're going to start with the Irvin Dembski Capital at the beginning of the year. That's how we're going to start the statement of owner's equity. And we were told that his capital started at 973,000. Okay. So we're going to put in the 973,000. Then we're going to look and see what else occurred during the period. It doesn't look, I don't see uh, 973 at the beginning. During the year, he made an additional investment into the business of 60,000 and he withdrew 25,000 for personal use. So we will put in here the additional investment by owner. As you can see here, we will show, and I believe that was 60,000. I just want to make sure 60, and he withdrew 25,000. So we'll put in the 60. And we will also show the net income from the business of 200,000. And then we will show the drawings. It doesn't like drawings. Does it like dividends? Let me go and look and see what I'm supposed to put in here. Withdrawals. Okay, I'm going to put in withdrawals of 25,000. And this is going to be a minus 25,000. And then we're going to have the Irvin Dembski Capital December 31st, 20Y5. So if we take the 975,000, or is that 973,000? Boy, let me see what that is. 973. So we'll take the 973. He added 60,000. He withdrew 25,000 and he had income of 200,000 for the period. But boy, oh boy, add one more zero in there. Okay, and we should be able to have 1,208,000 is the ending capital balance. 1,208 should be the ending capital balance. It doesn't like my withdrawals of 250,000. Oh, 25,000. Sorry. 25,000. I put in an extra zero there. So as you can see here, it doesn't like something. What does it not like here? Um, 25,000 is the withdrawal. I don't think I'm doing anything wrong there. So I'm gonna take a gonna take a save and exit, and I'm gonna go to assignments. Whoops. And I am going to take homework one and view the answer key because I don't think anything is wrong in there. Statement of owner's equity. So when I look at the statement of owner's equity, 1,208,000, I believe that's what I had. The 25,000 is in parentheses, so I do think it's just a glitch in the system as to why this was not giving me the correct figure. 25,000, 1,208,000. So if I go back in here, um, hopefully I can, it's probably not going to save my work, guys, because nope, it's not going to save my work. As long as you've got the minus 25,000 in here, you should be fine on the statement of owner's equity. I believe that is a glitch in the system that it is not giving you credit, and I will make sure and report that to Cengage. Moving on, now that I lost what I did, I'm going to go back here and just show you this answer so you'll be able to see. In this problem, then, we will then create a balance sheet. Now, the balance sheet is providing you with assets. The cash is 65,000. The land is 1,100,000. You've got supplies of 4,500,000. Those will be your assets. Your liabilities will be the accounts payable of 52,500. Did I say accounts receivable? Yeah, I did. Your liability will be accounts payable, and then your owner's equity will be the figure we just discussed in the statement of owner's equity, 1,208,000, I believe I stated. So as we scroll down here, you will see here's your income statement. Here is your statement of owner's equity, which is the 1,208,000. And then on your balance sheet, I thought we did a balance sheet in here. Prepare a balance sheet. Let me find that. But your balance sheet should have, I don't see that, guys. And it looks to me like we were supposed to do one, but I don't see that on here. But basically, your balance sheet, if you're going to do a balance sheet, it would start with the most liquid of your assets, which is cash. And then next would be your accounts receivable. Next would be land. And then you would show total assets. Then you would have your liabilities, which would be accounts payable. You'd total your liabilities. Then you would have your owner's equity, which is the 1,208,000. Then you would total your liabilities plus your owner's equity, and you would see that your assets would equal your liabilities plus your owner's equity. Okay? So that is for problem 2A. For problem 3A, I'm going to work this with you, or I'll do this. I'm going to go in here and I am going to preview as a student. So what we'll do, and everyone's going to have different numbers here because this is an algorithmic problem, but the concept is the same. Transactions on June 1st of the current year, Chris Bates established a proprietorship to manage rental property. The following transactions were completed in June. A, here's our A. Opened a business bank account with a deposit of $39,000 in the name of Bates Realty. Well, $39,000 is what Chris put into the business. $39,000 cash is an asset, so we will increase our cash $39,000, and we would increase our Chris Bates capital for $39,000. B, purchased office supplies on account for $2,300. Well, office supplies is an asset, $2,300 increased supplies. But when it says it was on account, that means we owe the money. So cash did not go down in this scenario. Accounts payable, which is a liability, went up for $2,300. You can always check your work as we're going along here. Okay? You can always check your work. Okay, now the next step is we can create a balance. After that, we've got 39,000 here. We've got 2,300, 2,300, 39,000. C tells us we receive cash from fees earned for managing rental property, $6,290. Cash went up $6,290, and our fees earned increased by $6,290. Okay, so we're going to carry forward our balance. As you see here, this is going to be $45,290, 2,300, and you can always check your work to make sure you balance. For D, we paid rent on office and equipment for the month, $2,820. Well, what do we use to pay rent? We use cash. So our cash went down $2,820, and our rent expense is $2,820. I believe I can just show that. Let's see if it wants it as a negative number. Yes, it wants this as a negative number. So we need to make it a negative number so everything balances here. So here's a negative on this side. Here's a negative on this side. E, we paid creditors on account $1,040. So we paid off in cash $1,040, and that shows 1,040. Our accounts payable also goes down $1,040 because we're reducing our payable. Let me just make sure these balances. carried forward. Okay, so now we have our new balance, excuse me, D 2820. The E is going to be the minus 1040. So I just need to carry this down, and I apologize. I'm getting ahead of myself. So what we'll do here is we take the 45,290 minus the 2820. So 45,290 minus 2820, 45,290, 2820, 45,290 minus 2820 is going to give us a new balance of 42,470. 42,470. This would be 2,300. And this figure, excuse me, 39,000. As we bring this down, our new balance is going to be 41,430. 2,300. This should be 1,260. Make sure my figures are right. You can always check your work. So I did something wrong here. 2,800. Supplies, 20. Oh, this is 0. And our balance here is 2,300. This is 0, 2,300. I just got that too many spots there. Okay, we're good now. Now, F. F states bill customers for fees earned for managing rental property, 5,220. Now, when we bill customers for fees earned, we know we earned the fees, but we did not receive the cash. That's why we're billing them. So when we are due to receive money for fees we have earned, we've earned them, therefore we're going to claim them as revenue. We are going to show accounts receivable of 5,220, and we show fees earned of 5,220. We carry forward 41,430, 5220, 2,300, 1,260. This number is going to be 11,510. And let's just make sure we balance. And guys, it's just so easy to make a mistake on addition. I do it a lot. So you just double check your work every time. G, we paid automobile expenses for the month, $630, and a miscellaneous expense of 310. So the 630 plus 310 is 940. So we paid $940 in expenses, and that is by automobile expense of minus 630 and a miscellaneous of minus 310. Again, check your work to make sure everything balances. And we'll carry this forward. That's 90. 40,000, 940. Let's just make sure I did that right. shoot, 40, what am I doing wrong? 39,940. Oh my gosh, 41,430 minus 940. 41,430 minus 940. 40,490. What the heck was I doing? 40,490. 40,490. Okay. Okay. And again, we're going to bring all these numbers down: 5220, 2300, 1260, 11,510, 20 minus 2820 minus 630 minus 310. And again, just keep checking your work. As we move on to H, H states paid office salaries of $1,980. So we're going to pay minus 1,980 because cash is going down. Our office expense, salaries expense right here is 1,980 minus 1,980 there. Okay. We'll bring down our balance, which will be 38,410. Oh my God, 4490 minus 1980. I need a calculator on me. 4490 minus 1980, and it should be 38,510. What the heck did I do? 38,510. 38,410. Come on, 38,510. Okay. And then we will bring down all these numbers: 5220, 2300, 1260, 39,000, 11,510, minus 2820, minus 1980, minus 630, minus 310. Okay. Moving on to I. Determine that the cost of supplies on hand was $1,360. Therefore, the cost of supplies used was $940. Remember, we purchased 2,300. We're seeing we only have $1,360 left of supplies. So if you subtract the difference, we used up $940. So we will show a subtraction of 940, and our supplies expense is minus 940. We'll put our new balances: 38,510, 5220. And they told us the amount left over was 1360, 1260, 39,000, 11,510 minus 2820 minus 1980 minus 940 minus 630 and minus 310. Okay. Our last one, J, shows us withdrew cash for personal use, $1,880. So we're going to subtract the 880, and we're going to show Chris Bates' drawing of 1,000 minus $1,880. We'll come up with all of our new figures here. 3, 6, 36, 660. Let me just make sure. Oh my gosh. 38,510 minus 1880. 38,510 minus 1880. 36,630. Okay, got that off. 36,630. Bring all of these numbers down. Now it says owner's equity is the rights of the owner to the assets. These rights are blank by owner's investments and revenues of blank by owner's investments and revenues and blank by owner's withdrawal and expenses. So what we're trying to do is figure out the owner's equity. We know he took in capital of 39,000 and fees earned of an $11,510, correct? So the owner's equity investments and the revenues increased his equity rights, and the owner's withdrawals and the expenses decreased his investment owner equity. The net income for June will be our revenues of 11,510 minus our expenses of 2820, 1980, 940, 630, and 310. The revenue minus those expenses will be our net income. How much did June's transactions increase or decrease owner's equities? So you will be able to see, based on all of these transactions, did it increase owner's equity? It increased owner's equity, and you need to show by how much. So that gives you some benefits into working the first homework problem. Then we talked about the second homework problem. And then let me move on to show you some information on this one. On this one, again, you're going to have a dry cleaner. And it talks about building and equipment are being rented. The actual work of dry cleaning is done by another company at wholesale rates. The assets, liabilities, and owner's equity of the business on July 1st gives you, at the beginning of the period, it tells you the cash, the accounts receivable, what the supplies are, what the land is, what the liability accounts payable shows, Joel Polk capital, and then it tells you all of these various transactions that took place. So you need to go through and start with the assets, liabilities, and owner's equity as of July 1st in equation form, similar to that shown in the chapter. So what we would want to do is start with the accounting equation. This accounting equation grid is what we're going to use to show what we began the month with. So the way we can figure this out is it tells us various information. It tells us that we started the period with cash of 45,000. So we're going to show the balance of cash, 45,000. Then it tells us that The accounts receivable was at 93,000 and supplies were at 7,000. So we'll show our 93,000 in receivables and 7,000 in supplies. Now remember, you can check your work all the time just to make sure you're on track. Moving on, it tells us our land is 75,000, accounts payable is 40,000. Land 75,000, accounts payable 40,000. It tells us that Joel Polk capital is at 180,000. So Joel Polk capital is at 180,000. Okay? So we are starting the period with various balances. Okay? Then we're going to look at these various transactions and work them through. The first one says Joel Polk invested additional cash in Delight dry cleaners with a deposit of 35,000 in the bank account. So we are going to increase our cash by 35,000, and that also affects Joel Polk capital increase 35,000. Again, we're going to carry forward our balances. Our cash is now at 80,000, accounts receivable 93, supplies 7, land 75. Our accounts payable is at 40,000. The Joel Polk capital should be at 215,000. We're going to check our work, make sure all is well. B, we paid 50,000 for the purchase of land adjacent to land currently owned by the dry cleaners. So when we purchased 50,000, remember we cash was reduced by 50,000, but land was increased by 50,000. Okay? So our cash decreased, our land increased. It didn't ultimately change our total assets, just the accounts within the assets were changed. Now we carry forward our balances. Our new cash balance is 30,000, receivables 93,000, supplies 7, land 25,000, Joel Polk 215,000, the payable is 40,000. Well, what did I do here? Oh, I subtracted instead of added. 125,000 will be the new balance here. Okay. Guys, you see why it's so helpful just to check your work. Why didn't it like this 50,000? Incorrect. Please try again. Minus 50,000. Well, that's right. Unless I don't see what I did wrong. Minus 50. I think this is an error in the system. Again, I will make sure this is corrected, but this is a new textbook, so they probably have some errors going into here. So I know this is a $50,000 cash. Let me just make sure that they didn't borrow any money. Paid 50,000 for the purchase of land. Yeah. Okay, next, we received cash from customers for dry cleaning revenue of $32,125. So we're going to show the $32,125 for dry cleaning, and we're also going to show down here the revenues of $32,125. Again, we'll then carry forward our balances. This is now 62,125, 93,000, 7,125, 40, 215, 32, 125, and check your work just to make sure everything squares up here. Then for D, we're going to show we paid rent for the month of $6,000. So we paid in $6,000 of rent, and we're also going to go over here and show a rent expense of $6,000. Okay? Then rent expense, $6,000. Thought it was 6,000. Okay, let me look. Paid rent for the month, $6,000. Well, that is correct. Let me make sure it says D. Paid rent for the month, $6,000. That is correct. So, I don't know why it says it's wrong, but we're going to ignore that. And we are going to bring down the balance. This is going to be 56,125,000, and we've got here 93,000, 7, 125, 40, 215, 32, 125, and this should be a minus 6,000. Again, I will contact Cengage because this is right and they just have it incorrect right now. Moving on for E. E says we purchased supplies on account for $2,500. So purchasing supplies on account, we did not use cash. We purchased them on account. So we are going to show 2,500 for supplies, and we purchased them on account, which means our accounts payable increased by $2,500. Okay? So our supplies increased by 2,500, our accounts payable increased by 2,500. Now we have our new figures. 9,500 are our new supplies. 42,500 minus 6,000. Okay, and we move on. Now for F. F says we paid creditors on account 22,800. So we paid that with cash. We paid 22,800, and we show our creditors, we paid down 22,800. So our new cash balance is going to be the 56,125 minus the 22,8. 56,125 minus 22,8. And that should be 33,325. And this 42 minus the 22,800 should be 21,700. Hopefully I get that one right instead 21,700, not 600. 21,700. Oh my gosh, 42,500 minus 22,800. 42,500 minus 22,800. I will make sure and have a calculator on me next time. 19,700. Okay, guys, 19,700 went the wrong way. I wish I could say I'm tired. I am a little tired, but that's no excuse for, you know what this is about? I used to not be able to use a calculator. Now I have gotten lazy. Again, as you see, some of these are showing errors. I know that 22,800 is right, so we will fix this. Okay. Now for G, it says we charged customers for dry cleaning revenue on account 84,750. Okay, guys, what this means is we earned dry cleaning revenues of 84,750, but we haven't received the cash yet. So we're going to show that 84,750 is going to be an accounts receivable right here, 84,750. And we are going to also show our earnings of, let's go down here, of dry cleaning revenue is going to be down here. Our dry cleaning revenue of 84,750. I wish that these dry cleaning revenue 84,750. 84,750. Let me make sure. There it is, 84,750. Let's make sure our numbers balance. And then we're going to carry down our balances, 33,325 and 93 minus 84,750 is 177,750. Let me make sure that is right. Thank God. 9,500, 125, 19,700, 215, 84,750 minus 6,000. Okay, why it doesn't it like this? What did I do wrong here? 84,750 is right. The revenue is right there. I just think we're going to have to get that corrected. Next for H. H says we received a monthly invoice for dry cleaning expense for July to be paid on August 10th of 29,500. So we have an expense of 29,500 we haven't paid for yet. And so it's accounts payable. Our accounts payable is right here, 29,500. Make sure I put that in right, 29,500. And over here, we'll go and we'll find our dry cleaning expense of 29,000. Dry cleaning expense right next to it, 29,500 will show in here. 29,500. And then again, we're going to carry forward our balances. Um, 2, 9, 49,200, 215, Okay. Hopefully all of that balances. Now for I, we're going to show paid the following: wage expense of $7,500, truck expense of $2,500, utilities expense of $1,300, and miscellaneous expense of $2,700. So that's 10, 12, 7, that's $14,000. The 75 plus 2,500 is 10, and the 13 plus 2,700 is 4,000, so 14,000. So we are going to show cash decreased of $14,000 minus 14,000. And we're going to go over here to our wages here of 7,500. So we're going to take wage expense is 7,500. We had truck expense of 2,500. Truck expense here of 2,500. We had utilities expense of 1,300. Utilities expense here of 1,300. And then we had miscellaneous expense of 2,700. So we'll go over here, but it's this last one, miscellaneous expense of 2,700. So hopefully, oh my gosh, let's see what I did wrong here. 14,000. I think I have them in the wrong spots. We have 7,500 here minus 7,500 minus 2,500 minus 1,300 minus 2,700. Hopefully, oh my gosh, what am I doing wrong? This is I, 14, let me make sure. I paid the following: wage expense. I should be in there. These numbers should be right. So we're going to just try this 325. And this should be 33,325 minus 14,000. 19,325. That should be a 19,325. Minus 7,500 minus 6,000 minus 2,500 minus 1,300 minus 2,700. Why that's not balancing, guys. Again, kind of frustrating. Next, received cash from customers on account of 88,000. So 88,000 came in cash, 88,000. came in on account. So cash increased 88,000 and our accounts receivable decreased 88,000. Now, the reason it decreased 88,000 is we're not going to get that money anymore. We received it. So one asset increased, one asset decreased. So for J, our cash increased and our accounts receivable decreased. And the reason the accounts receivable decreased is we were waiting for that money to come in. Now that it came in, we're not going to receive that anymore because we received it. Determined that the cost of supplies on hand was $5,900. Therefore, the cost of supplies used during the month was $3,600. So we are going to show our supplies is down 3,600 because we used up the 3,600. Okay, so our new balance is 5,900 here. Well, we used up 3,600, so the new balance is 5,900 here. And let me bring forward these figures. 88,000, 108, 107, 325. And this one, 177 minus 177, 750 minus 88,000. 89, 750. Okay. Again, I'm just bringing these figures forward. Okay, let's just make sure we have that right. Hmm. Okay, now with I, we'd paid cash to Joel Polk for personal use, $12,000. Those are basically dividends. So we paid $12,000 to him, 107, 325. We paid 12,000. So we are down 107, 325 minus 12. 95, 325. So we've got here the 89, 750, 5,900. Okay. Again, I don't know why they're showing up negatives. I will make sure you do receive full credit for that. Okay. So basically, we're going to go through these transactions just like we did. Then we're going to prepare an income statement for the month ending July 31st, 2024. And we're going to create that income statement from these transactions. We know if we go over, we can show our revenues, and our revenues are 84,750. Okay, we know that's right, 84,750. And then we take all of our expenses, our dry cleaning expense of 29,500, our wages expense of 7,500. We can take our rent expense, of 6,000. Our supplies expense, okay, I know we should have a supplies expense in here because we used up supplies of, I thought it was 3,600. So I need to go down here and show my supplies expense here of 3,600. Let's see where that is. 3,600. Well, I know that's 3,600. Now that I'm getting myself frustrated, I'm going to go into the assignments here for you and show by viewing the answer key. If we go here, our supplies expense, I thought it was 3,600. Why does it say 4,500? Did I do something wrong there? Or maybe these figures change, they're different. I thought mine specifically was 3,600, but basically you're going to take your fees earned minus all your different expenses to create an income statement. Then after the income statement, yeah, this is an algorithmic, so they're going to change. You're going to create your income statement with all of your revenues minus your expenses. And then from there, you're going to create your statement of owner's equity that basically shows what you started the period with, what was additionally invested during the period, plus the net income minus the withdrawals to come up with the statement of owner's equity. And then from there, you will create the balance sheet at the end of the period. And you'll be able to figure the balance sheet because you'll take these bottom numbers. You start with your assets, your cash, your receivables, your supplies. You then take your liability, the accounts payable, and then you'll take your owner's equity section from the statement of owner's equity. Again, guys, I really apologize for the errors on this. I will make sure everyone does get the full credit they deserve. I will contact Cengage just to make sure everything is corrected as soon as possible. So I hope that's been helpful. Good luck, and I will see you soon.